In this video, I'm going to show you how to correctly shop for a mortgage without risking your credit score. And I'm going to show you how to save at least $5,000 in your first 5 years of home ownership. How we do that is we simply want to cut your payment by $80 a month. And really all you have to do is ask the right questions. And I'm going to show you what questions to ask. A little bit about myself. My name is Marcus Bruno. I've been in the business for about 18 years. I've consulted and helped on hundreds of real estate transactions. When I got into business in 2000, I was also involved in the mortgage end, processing loans, helping people refinance. So I'm really familiar with that side of the business. According to the Consumer Financial Protection Bureau, only about half of people even shop for a mortgage. Basically, 47% of homeowners don't even compare lenders. You just, talk to one lender and that's who you're going to go with. So my first recommendation is talk to 1 or 3 loan officers and get some quotes from them. You don't have very long to shop for a mortgage before your credit score gets affected. So it's usually about a 30-day window where you can pull your credit with as many loan officers as you want, and your credit score shouldn't be affected. That's what they say, shouldn't. But if it's not worth the risk to you, or if your credit score is right on the line, or let's say you're taking your time to shop around, then you want to go to myfico.com and pull your credit there yourself. It's a $30 fee for doing it. And that credit report, you can use that and give it to different lenders. It has a very accurate credit score. It's the same credit score that the lenders will pull the lenders will find when they pull your credit. If you go to Credit Karma or freecreditreport.com, they'll give you a copy of your credit, but your score won't be accurate. With the score from myfico.com, you'll be able to take that credit report to different lenders. They won't have to pull your credit until you're sure you want to go with that particular lender. So let's talk about the APR, the annual percentage rate. It's the best way to really compare two mortgages very quickly. So the APR is just basically the interest rate plus a factor for all the fees that you may pay in a mortgage. And if you put 2 loans together with the same rate but different APRs, you kind of know which loan is more expensive. So if you go to bankrate.com, you can find 2 loans with the same rate. Look at this one, 3.875 rate, 3.875 rate. They both say no points, but one APR is a little more expensive. See this APR of 3.908, this APR of 3.918, meaning there's some fee that you're paying, even though the rate is the same. There's some fee that you're paying that makes this one a little more expensive. Let's see. Again, 3.875, 3.875. This one's the APR is 3.918. This APR is 3.919. So if you can put 2-3 loans together and they all have the same rate, but the APRs are different, you can then tell which loan is more expensive. That's a good quick way of seeing, which guy is giving you a least expensive loan. So of course, we're talking about actually saving you money per month. So you also want to look at your insurance, okay? So when you are making a mortgage payment, there are 4 factors involved, and we call it PITI. There's a principal, an interest payment, tax payment, and then there's your insurance payment. And insurance is actually 2 type of insurances that you're paying: a mortgage insurance and homeowner's insurance. So when you're making a mortgage payment, you have to pay in your payment a mortgage insurance fee. The mortgage insurance is basically the lender making you take out insurance on yourself in case you can't make your payment. They got insurance on you, so an insurance company will pay them in case they have to foreclose on you. So they're making you pay your insurance on yourself, basically. The mortgage insurance is different with every lender you talk to. So if you talk to one lender and the rate is lower, but your mortgage insurance is more, you got to know that. All right. So as you talk to different lenders, you want to ask them what is the cost of their mortgage insurance. Because remember, if we can save money there per month, you're going to save, overall thousands of dollars. And now you got homeowners insurance. Now, homeowners insurance has nothing to do with the lender, but the homeowners insurance does have something to do with the house. Okay, so most people will go to their car insurance company, or if they're renting, they'll go to a renter's insurance company and say, hey, I'm about to buy a house. Can you give me a discount? And usually they will. The only problem comes if there are maybe existing claims or previous claims on the home that you're buying. The insurance company might charge you an additional cost because of that. If that situation comes up, again, you want to talk to multiple amount of home insurance companies, but there are also homeowner insurance companies that don't care about the house. They only really care about you. And these type of insurance companies will pull your credit. They'll see if you have previous claims. And if you feel confident that you don't have any past history that can increase your homeowner's insurance, then you might go that route. So you're going to go with a typical insurance company. But if the home is costing you more money because of previous claims, then you can try another route, which is a home insurance company that really grades you, the person who's buying the home, rather than the home. So hopefully that makes sense. And again, if we can save you $80 a month, we can save you $5,000 over the first 5 years of owning a home, basically because you save some money on your homeowner's insurance, your mortgage insurance, and maybe even your interest rate. Now, 1/3 of home purchase transactions experience delays for various reasons, but half of those delays are because of financing issues. So you really want to make sure that the loan officer you're dealing with knows what they're doing. All right. So you want to talk to at least 3 loan officers. Get some referrals from friends and family members who have done deals with loan officers. And if you need a referral for a loan officer, don't hesitate to give me a call or send me an email. Also for home insurance, homeowners insurance companies. If you need a homeowners insurance company, because you're experiencing some challenges in your transaction, give me a call. Be happy to refer you a couple of reputable homeowner insurance companies as well. Now, when you're talking to loan officers, a lower rate is important. But if they can't give you a lower rate, you can also ask for a lender credit. It's very popular right now for the lenders to actually credit you some money in the deal, maybe to the tune of 1% of the sales price. So that's a big deal. So if you can't save money monthly, why not go into the house saving $2,000-$3,000 by asking the lender to credit you some money, which is very common.